Hello, hello, hello. It's 4:05 local time, 25th of March. Euro dollar on an hour chart at 1.17942. As expected, the price is going down towards those short-term stops of the dumb money longies and eventually to the medium-term stops of the dumb money longies. So we capture a stop hunt here. Note that this is within a dumb money squeeze, so we have dumb money buying the market and smart money pushing the price against them. So in this video I try to capture the run to this short-term stop cloud, the blue lines here. This one here is the target. And as I said, there can be pullbacks, but they can go for the whole lot. We have seen that before. It should be noted that the price is in the out of the range mode. That means that even the long-term charts, like 4-hour charts, we are below the lows of the last weeks and month, which implies that there is some dumb money tolerance and the price can snap. We need to take this into account when the price is OR out of the range. Okay, so I will try to capture this move, so I will let this video run a bit as well, but I do not want to make these live trade videos too long neither. So let's say around the 10-minute mark I would stop it, but look, right now it's coming. There we go, you know, it's showing us once more that Forex is completely manipulated and how that works. And my work here is all about that, about stop hunts and position runs and dumb money squeezes, counter moves, inner range runs, etc, etc, etc. And of course we have several setups, but there are three big ones you see over and over again, which is a failed reversal one, which is the one right here with a squeeze. Then the dumb money switch, where we trade the actual reversal. And a post main run setup, and also then the trade towards targets within a squeeze. So here we have a failed reversal plus a squeeze move, so that it's a position run as well as a stop run. You have to understand that. So they are taking out stops of the dumb money longies and putting dumb money long positions into drawdown. And obviously these longies here already are all in drawdown by that pip amount, obviously. There we go. First short-term stop turns yellow and will soon disappear, and now we can capture the whole run. Let me try to zoom in so you can see it better. There we go. And those kind of moves are tradable for the causality trader, yeah, and institutions trade like that, obviously. Retail traders, they fall victim to all this manipulation, which has been shown many times before. So here they're just nibbling the second stop now. Third one, boom. Second turning yellow. So my shorts are nicely into profit. What I will do is, look, there seems to be momentum. I may take part of my shorts off the table once the big one there has been cleared. Unless, of course, there's momentum, it just jumps straight to the MT at 1.1768, which can happen, you know. In such a scenario, it's not that it needs to take out the short-term stops followed by a massive pullback up. Doesn't need to do it, because guess why? Because everything is aligned. We have the longies, we have the stop accumulations, we have the chart pattern, we have the economic plausibility. So a little shorties came in, but it just delayed the target run, as you can see. This is by no measure big enough in order to create a dumb money switch or a squeeze collapse. So this is ongoing, and it can go on for hours. You know, it's pretty slow in terms of the actual runs. It's slower than most people expect, because this is an hour chart, so each candle is an hour. So you can see that scenarios like this can unfold over several hours easily. But the speed of the market is dynamic. It always changes. Sometimes it's slower than on other times. Here, if there would be any unscheduled comment on the news front, they could even use that to just, boom, put a straight long bar down towards the target. We have seen that before as well. So if anyone says something which would increase the value of the dollar, they would use that economic plausibility in order to implement an exaggerated stop and position run. So that's the times where the market is quite sensitive to news. And other times it will not react to big news, because then the causality is not aligned, and the smart money gains nothing out of implementing that type of economic plausibility. I also did an Australian short, which is coming nicely, but I didn't make a video of that one. So that's typically what we like to see if we trade towards the targets on the right side of the market. And if you have absolutely no clue what I'm talking here and what's shown, then this is a sign for you to sit down and study all of this on the channel. A lot of knowledge is for free, so make use of this. Use the forum, use the website, etc. Because you need to understand these things. There's no way that you will have success in the long run without it, because, you know, to just try to trade statistical patterns, etc. doesn't work. That would be easy, and this game would be easy. Here we go. STS run incoming. You can see that every single pip is the result of price control. It's not that the market is random sometimes, you know. This is like a controlled video game. Okay. So I think I'm gonna upload this video now. All the best.